Today's overlooked stock is a winner, was a winner, has been all forms of past and present, basically, George, but I don't hear a lot about it. Mr. Tsilis, tell me about TSS Incorporated, ticker TSSI. Had a big move today, data center centric, just one that you don't really hear a lot about. So we're putting it on the overlooked category. And I mean, it seems like we should be talking more about it.
I thought maybe we had talked about it, but
we might have.
At the very least, I didn't.
You probably remember better than I do.
We might have, or at the very least, I know I've either seen the symbol or it just looks familiar to me. But I mean, obviously, this one slipped through our fingers, OJ, because it's higher, I think, by 40-fold over the last year. I mean, it was a penny stock. If you just go back to April of last year, where it started to just really take off, and I can see why. I mean, if you look at the underlying business, and TSS essentially is called Total Site Solutions Incorporated. That represents a symbol, but it basically is a service company. They provide integration services for data centers and server rack technology companies. So they help integrate, server networks and procurement. So they buy hardware, they deploy the hardware, but they also provide MRO, which is maintenance, repair, and operations for server centers or server rack systems for artificial intelligence and, of course, cloud computing. And a couple of big customers that they secured over the last year that I found out include Walmart, Microsoft. So these are big names that we're all familiar with, as well as Dell. Dell is essentially one of their major supply customers and integration customers. So they're working in tandem with Dell to basically build out server rack systems for major AI customers and data centers. And they've secured a multi-year supply deal with Dell, and it is their primary customer. So I think that's something to keep in mind as you look into this whole industry, but this company. But I mean, it's been a remarkable mover. It's tough to find some of these names that I can say that are very obvious. This one, again, just slowly has been moving to the upside. It doesn't have any analyst coverage. I think that's another thing that maybe reason why we haven't really picked up on it, having been a micro cap just not too long ago. But if you look at the sales of the business, they seem to match to a mild degree, or to, I guess, a large degree, the price action, because sales in the last year for the business were in total about 120 million. But if you look at last quarter, Q3's reported earnings, it was more than half at around 70 million. If you look at the total year-over-year comps in sales, looking at last quarter's numbers, it was nearly 700% higher. Like I mentioned, at 70 million, high margin systems growth over 370%, and also growth in AI rack enabled integration systems. Their operating margins also increased by 630%. So this is a company that's gaining traction in sales and operating margin growth, for that matter. And they have secured some big customers. And I think obviously the market, picks out, secular catalysts first. There was obviously a secular catalyst going on with AI data centers. Now with this whole, Trump and major customers, including OpenAI, SoftBank, Oracle, with this new Stargate investment forum. This is a company that's really locked into this ecosystem.
Okay. Yeah, the chart kind of speaks for itself to some degree. The story we've been talking about here today, the spending and the insatiable demand, it seems, dates back now for at least a year for this company. In terms of then kind of supporting the rally, George, what type of growth, what type of earnings power does this need to deliver? Because it does seem like it's moving on a few pretty big deals, the debt financing, the credit facility with the bank, the building out of new factories. This is the type of stuff that's cost intensive as of now, but we've seen pay off for all these companies. The market distinctly is very okay with CapEx as long as it's in this sector, it seems like right now.
Well, yeah, I mean, just look at Oracle today. I mean, Oracle moved based on CapEx spend. It wasn't really anything other than that. And so obviously the market is really preferred. I think you make a good point. Companies that are spending in capital expansion right now. I think if you look at the price action on the stock, you would say you may have missed it, but you could have said that another month or 2 months ago, and it just keeps moving higher. So with that said, if you look at the total sales, which are again roughly about 120 million trailing 12 months, the net income of the business is around 4.5 million, so they are profitable on a net income basis. Looking at the cash position, 46 million. They secured 20 million revolving credit facility as of I believe last week, or I believe on the 1st of January, around the 7th of January, the first week of January, I meant. So if you look at it from a price to sales standpoint, looking at market cap at around 320 million, sales at 120 million with 100+% growth in sales, from a price to sales standpoint, I've seen much worse, even though the stock has gone higher by 30 to 40 fold over the last year. So with that in mind, how to trade this is kind of like, I guess the question maybe people have is just look at some barometers. You could look at the 10-week moving average. You could look at the 50-day moving average, and it seems to be respecting these technical areas. So 2 consecutive closes below the 10-week moving average, maybe that's a sell point, and then 2 consecutive closes below the 50-day moving average also is a very similar corresponding kind of metric.
All right, good stuff. Thanks, George.